Hello fellow trailblazers, welcome to another video on Money Adventures with TK. If you're new to the channel, my name is Tukiso TK Ntebe, and on this channel I bring you fresh content on anything personal finance and business related content. Now, many of you have been asking me to explain what a unit trust is and how it works. So in this video I'm going to do just that. But first things first, a quick and important disclaimer. Nothing that I say on this video constitutes as financial advice. If you are looking for financial advice, however, please speak to a licensed, registered, and qualified financial planner or financial advisor. So, what is the difference between what is a unit trust and what is the difference between a unit trust and a trust? A unit trust is a convenient and low-cost investment vehicle that can help you get into the investment universe or the investment market. Now, there are many different types of unit trusts that are available depending on your investment goals and what it is that you want to achieve. A trust, on the other side, is a legal entity that is established by the trust founder, where they transfer their assets, either property, investments, or any other assets into the trust, appoints trustees that govern how the trust will work, and then it's for the benefit of the beneficiaries, which can be their kids, family members, and so on and so forth. So there's a big difference between a unit trust and a trust. Also, I should mention that a trust does come with what is called a trust deed that governs how the trust should be run and operated and managed by the trustees. So that's a difference between a unit trust and, of course, a trust. Now, what is the difference between a unit trust and a collective investment scheme? Previously, unit trusts were called unit trust, but later on regulations required that they become a collective investment scheme. So now imagine a case where there's a bag of money and you have this bag of money and you want a unit of that bag of money. So now you want to buy a unit of the bag of money, and that bag of money gets invested in the market by what is called an asset manager. An asset manager's job is to basically invest this collective investment scheme from different investors of different sizes and different wallets in the market in exchange for either interest or return, interest earned on the investment, dividends, or other rental income that can be earned. Now, when I speak about rental income, remember that I spoke about different types of unit trusts that are available. Depending on what your goal is, some people have a goal to preserve, so a unit trust such as a money market fund could be beneficial to them. Some people want to preserve but also earn an income, so a fixed interest or a fixed income unit trust could be a solution that they can consider. Some people want to invest in property but not necessarily invest in the brick and mortar, so there is a property unit trust that you can consider, or also known as a real estate investment trust that you can consider. There's also people who want to invest in the stock market but do not necessarily want to go to the Johannesburg Stock Exchange, the Masiri Securities Market, or the other listed stock exchanges such as the New York Stock Exchange, for example. And a fund such as a unit trust such as an equity fund, for example, is something that you can consider, which gives you access into the equity or stock market. So what are the benefits of a unit trust compared to other investment vehicles that are available? Number one, these are managed by licensed and regulated asset managers. So there's a fund manager that works for this particular unit asset management company. They've got the skills, they've got the fit and proper requirements, they've got the knowledge, and they've got all this experience that they bring to managing that particular fund. Secondly, each fund is registered and licensed separately. So for example, if I'm invested in a money market fund, it's registered separately from what will be called a fixed income or an income fund, popularly known in the Lesotho market. Again, so those two will be registered and licensed independently. Secondly, they give you diversity. We always say never put your eggs in one basket. With a unit trust, you are able to diversify across different asset classes or different categories or buckets of investment. The third thing that's also very important is accessibility. When you do want to access some of this funds in your investments, Some asset managers allow you access up to 48 hours. So they provide a lot of flexibility in terms of that. The other ones that are very important is, I spoke about flexibility. So flexibility in the sense that depending on the asset manager that you're working with, for example, you can start a unit trust from as little as 5,000 rand or 5,000 valuti, or in some cases 1,000, depending on the asset manager. And it gives you the flexibility to top up when you've got extra income, sign up for a debit order on a month-to-month basis. When things get a bit difficult, you are able to stop their contributions. And of course, it's also very important to mention that when things do get good again or better or improve, depending on your financial situation, then you are able to top it up and so on and so forth. So unit trusts give you the flexibility to pause, continue, transfer extra income that you may have, or sign up for a monthly debit order. So that's the other reason I love that. Safety, like I mentioned, these are licensed, these funds are licensed and regulated by the regulator. For example, in Lesotho, they'll be regulated by the Collective Investment Scheme Supervision Team with the Central Bank of Lesotho, or whichever jurisdiction you're watching from, they will also be licensed and regulated. So in terms of safety, you can be sure that your money is taken care of and is protected. So how can you start your investment journey? A lot of people get overwhelmed with investment information because there's really quite a lot to consider, right? So a simple thing as a unit trust or collective investment scheme, once you understand the goal that you want to do, it can ease you into the investment journey. And once you have the confidence and once you have a better understanding of how investments works, then you can start taking a lot more risk and trying out new funds that are available. Another fund that for me that I found very particularly interesting is a balanced fund. So a balanced fund is basically a unit trust that has exposure in different buckets of investments. So it's got a bit of cash, it's got a bit of bonds or fixed income or fixed interest, it's got a bit of property, it's got a bit of shares. So when you are looking for something that's very diversified, something that's very balanced in terms of different asset classes, is for me a balanced fund is also another option to consider from a unit trust perspective. Now, who offers these unit trusts? So unit trusts, like I mentioned, are offered by asset management companies, and some banks or some financial service providers do have a bit of unit trust. But for me, I prefer working with asset managers because they've got the expertise and they've got the knowledge in terms of doing that. So I don't know what other questions you want me to answer and tackle. There's a lot of asset managers in Lesotho. There's currently 3 that are registered, but in the South African market, there's many asset managers that are licensed and operating in the industry. So for me, it's very important for you to do your research. Number 2 is for you to understand your investment goals. Number 3 is to understand your risk profile and appetite, and also how long you want to invest, where you want to invest, but also very importantly, the expected return. Quick disclaimer again, investing takes time. It takes time to build and accumulate wealth. It does not happen overnight. I saw a lot of people lose their money over get-rich-quick schemes. Investing takes time. So do your research, consult with professionals, get the help that you need, and happy investing. It takes time to build wealth, but the sooner we start, the sooner we can benefit from compounding interest. So let me know in the comment section below what you think about this particular video. Where are you? Also share tips on where you've started investing, which unit trust you are investing in, and how it's going, and some of the lessons and mistakes you have made along the way. And of course, you know the rules, guys. If you like the video, give it a thumbs up. Secondly, leave a comment below, and like I mentioned, share your story. And then last but not least, share this video with family, friends, and everybody who can benefit. Remember to also subscribe to my other YouTube channel where I share travel and lifestyle content, Escapes with TK, and of course sign up for our free newsletter, which I will link below. For more information on what I do and to advertise on this platform, you can visit my website, which is www.tkinterview.co.za. wait, www.tkntebe.com. So yes, I'm happy to connect with you, and I'll see you guys in the next video. Love, peace, and money. Mwah.